So since we don't have any question, let me look at this from the perspective of Elliott wave from the monthly time frame. Let's use a different method, which is let's use Elliott wave to try and see how we can break down from the monthly time frame to maybe the daily time frame to see what we can understand based on the trend. Okay, Elliott wave, I told you guys, is something I used to identify the higher time frame trend, since we're observing and we're seeing we are making a higher time frame move right now, and the trend is not really that clear on the lower time frame. Let's see what Elliott wave could say could be the direction of what's going on right now. So first of all, we try to identify what market are we in. Are we in a corrective market or in an impulsive market? So if we were to do something like this, we can say this is a 1, 2, 3, 4, 5. And then this will be an A, maybe a B, then a C. But we can't assume this. And I'll tell you why, because of the rules of Elliott wave. So this 4, it doesn't really rhyme with the rules. So we can't assume that. But if we zoom in to just paying attention to just this price action here, we could say impulsive, corrective, impulsive, and then corrective. So the trend is bearish. I know I can just easily just say the trend is bearish, but this is how I make my analysis. I do it from the very, very basic perspective that I'm trying to make sure that everything is not just based on assumption or based on my own understanding. I have to just do it from the basic perspective every single time. So I learn it again, over and over and over again. Okay, so this is a bearish trend. So if we're looking at a bearish trend, then the trend has to be impulsive. Okay, so let's say something like this, and then this would be the territory of wave 1. This will just be a week. This will be a week, and then you can also see this does not really page into this territory, and then this could be a different wave, like A, B, C, or X, A, B, C, D, E, A, B, C, D, E. And that was the beginning of this wave 1. So I told you I use Elliott wave to observe the trend on the higher time frame, basically to understand what's going on. Okay, so I don't go to the lower time frame to try and look for entries using Elliott wave. I just use smart money concept. It's just easier. Okay, it's easier to use smart money concept than do that. Let's go to the lower time frame. Let's say A, B, C. Are you guys following up? And can you guys hear me? I forgot we had.
Yes, I can.
Okay, you guys are understanding what I'm doing. Those of you who took the YouTube mentorship, you understanding what I'm doing, right? Let's use a channel as well to try and identify the trend. I think if we then look at this from this perspective, we could say this is like a major correction. Let's say a complex correction. When we say complex correction, like when we have the WXY, those kind of trend. I'm trying to not waste much time, so we won't go to that much details, and we'll just keep shrinking. We'll just keep shrinking till we get to the point where we can understand the daily time frame. Okay, so this will be like A, B, C. And then also we can see that wave 3 is also the longest wave if we're looking at it like this. I think it's quite longer than wave 5. and also much longer and shorter than wave A. So this could very well be an impulsive complex correction wave. Okay, so that would be let's say if I had my pattern book here, I would have observed that, but let's just leave that at that. Let's just focus on what we have here now. And then now let's look at what might be going on here. So this could be a wave A, and then a B forms before a C. And we can see the breakout from the channel. This would be a resistance level. So the resistance here, price bounced off that. Now it's going back up. We have another around here. Okay. And then on the lower time frame, we'll probably have another one like around this area here. That is, let's say we're using Fibonacci tool to understand what's going on here. So if a retracement is likely to happen, let me flip the feed to the other side. Okay. So when it comes to Elliott wave, you can always use Fibonacci tool as confluence. Same way when we're doing the smart money concept breakdown, I used multiple concepts, right? I swinged from ICT to smart money concepts, sometimes, use terms from Wyckoff. But that's the same thing you can do when it comes to Elliott wave. That's why I'm going through the harmonic patterns mentorship. For those of you who are familiar with Elliott wave or you like to use Elliott wave, you can then confluence it with harmonic patterns or proper understand Fibonacci from the perspective of harmonic patterns, so you can also apply it on Elliott wave. That's something as well, So no knowledge is a waste basically, and understanding different perspectives just gives you better confidence to what you think could be happening next, right? So it's never a bad thing. As you can see, it's very very impressive and very very cool that I could just switch method and still understand what's going on, even without looking at price action or any of those stuff, and use a completely different system to try and predict what's going on. So I could predict this for A, that is 88% of wave B from wave 4, because this would be the range of wave 4 to wave 5, right? So I'm predicting that price could be doing wave A while mitigating 88% Fibonacci level of the wave B within the range 4. That's saying something like this. Okay, so we can also say the wave B is predicted for price to retrace back into the discount of this newly formed range, this range that is being formed. Okay, but at the same time, in Elliott wave, the most important aspect of the Fibonacci tool is the 61.8. That's why you see I have my own blue here. And once this is broken, the next most relevant will be the 88. For now, we are currently testing off the 61, as you can see clearly. We're testing off the 61 Fibonacci level. So there's also still every possibility that price could do something like this, like we predicted using smart money concept. Are you seeing? So this is what we call confluence from different method. We did the same exact prediction using smart money concept. And now we're doing the same thing again using Elliott wave. Now we come down to the daily time frame to understand what's going on within this wave here, since we identify, let's say we have two major resistance level. Okay, one here. And then on the daily level, we also have this as the 61.80 Fibonacci level. So we would say, since this is wave C and wave A can easily be formed with a flat. So let's say this would be a wave A, B, and then a C to form this one. Okay, this is a prediction based on what we are saying here. This is a prediction. Remember, I said something about there's every tendency that this could be retracing. But at the same time, I'm doing something like showing a projection of price doing something like this. Do you know why? That's because this is still within the internal range of this range. So something like this can still happen and price still remains bullish. That's what Elliott wave is trying to tell us here. So not because we are retracing from here, or let's say because we are within the weekly, we have a bearish week within this week, we should now assume that the trend is now bearish. Elliott wave is trying to show us that that could just be the wave B going to wave C on the weekly time frame. Okay, and then you're within the internal range of wave C, which would be the daily structure. So the daily is retracing, not the weekly. The weekly is still bullish. The daily will be retracing. That's what it's trying to say. We might have a daily retracement within this week, and then next upper week, the trend goes back bullish. So now we have shrinked it again to just from wave B to wave A. This is how you trade Elliott wave. This is how you shrink from time frame to time frame. Unlike smart money concepts where you have to now focus on, one zone, this, that. Elliott wave, you just keep identifying the waves and, keep predicting till you get to the lowest point where you can get your SL and your entry point. So on this aspect now, we can say this is 1, 2, 3, 4, 5. Okay, this can be 1, 2, 3, 4, 5. As you can see, wave 4 did not get into the territory of wave 1, so we can be correct. That's how you follow the rules. For those of you who say Elliott wave is not current, the method doesn't work anymore, you can see me use it on a live chart. This is current market structure. It's not like I'm picking out a specific market to make a video or create content or any of those stuff. This is EURUSD, current price action, and I'm breaking it down using Elliott wave method. Okay, so this could be the 1, 2, 3, 4, 5, and then this could be wave 1. And also, we can still be wrong. I can just be right because I'm very, very good at using Elliott wave. So I'm good at identifying the wave pattern. But that doesn't mean my analysis is 100% correct. Okay, so I could still be wrong. That's just how analysis works. There's every tendency I could still be wrong. So let's say this will be now wave 2, retracing into the territory of wave 1, and then we could have wave 3, then 4, and 5. Identify the different waves within each other so we can understand what's going on. Okay, so this is Elliott wave is also showing you market structure, but it's not letting you predict it the way we would normally just casually just use our eyes and higher highs and higher lows to predict it. Elliott wave is trying to show us using wave count. Okay, so we could say this is, let's use Fibonacci. Let's not assume, let's use the Fibonacci tool to see the 61.8. Okay, so using Fibonacci, we say retracement could be happening around this area. So we could have something like this. And the price goes back. That is paying attention to the internal structure of this area. Remember, we are shrinking it down. We're not paying attention to this. This could take to the end of, as you can see here, December, before we complete this. This is still the daily time frame. We are shrinking our perspective to the current price action. So we keep shrinking till we get to this point. Okay, so pay your attention to this point. Leave this aspect. This is just top-down analysis. Okay. Now, let's take this out as well. Let's pay attention to this on the 4-hour time frame. So based on what we had on the higher time frame, as you can see, because we are using Elliott wave and we're doing it properly, you can see every impulsive move right from the higher time frame down to the lower time frame is being identified correctly because we're using a higher time frame perspective. So each time you see an impulsive move, what is identified with an impulsive pattern, even on the lower time frame. This is a correction. This is a corrective move. As you can see, wave 4. This is an impulsive move. As you can see, wave 5. This is also an impulsive move. As you can see, wave 3 is the longest. Wave 1, a correction. Wave 2. So you see, there's every possibility that we're correct. That is because we came from the higher time frame, not because we just came to the 4-hour time frame and then start pointing at 1, 2, 3, 4, 5, A, B, C, D, and saying you're doing a lot. So that's not how it works. Okay, you have to follow the rules and you have to use multiple time frame. That is not neglected. Okay, so let's look at this. Now we're expecting wave A. Remember, we can't trade from wave A, and price is currently retracing off the Fibonacci 88 Fibonacci level of the daily range. So we have to see wave A. We have to at least see something like this. Okay. So predicting this now, this is trying to tell us that, like we used, and from what we just saw on smart money concept, when we use SMC, we can see that price is also mitigating a fair value gap on the 4-hour time frame here. You see, things are becoming more clear. So there's no bullish confirmation yet. But if this is correct based on Elliott wave, even if we're going to see price going back up, it's going to just be a stop point of this high, for price to go back down. Okay, maybe the wave 5 is not yet complete, but it should be complete from here. And then we should be seeing a bearish retracement. That is saying Monday, Tuesday should be bearish. Monday to Tuesday should be bearish. That's what Elliott wave is saying. And then at the end of the week, we should be around here, or we should be done and we should be moving forward. So price should be retracing, and the major retracement area based on Elliott wave is price getting back into this area of interest. And we are now on the 4-hour time frame. Like I said, this is where I stop with Elliott wave. Anything lower than this, I start using smart money concept. And you can see I've already started pointing at fair value gaps and all those kind of stuff. So I'm switching to smart money concept now. So if you have any questions for what we have just done using Elliott wave, you have any question from that, let me know so I can address it too as well.
Honestly, I'm not. I don't use Elliott wave for light trading, and me seeing you do this is actually very nice. But let's confirm the harmonic pattern and this seem a little bit similar. Or is harmonic pattern just meant for like mostly entries or something?
Flexible for entries and lower time frame, which is one of the reasons why I'm doing it again, because for those people who are not familiar with smart money concept and they like Elliott wave, they can easily mix Elliott wave and harmonic patterns. And since I'm not showing them anything related to the lower time frame on Elliott wave, they can now use harmonic patterns to confirm the lower time frame. But harmonic patterns is also very, very useful on the higher time frame. But before we continue, if you look at are you guys seeing what I just did just now on this particular structure? In as much as it was very crazy and unpredictable, if you look at Elliott wave, it still shows that this is kind of like still correct to identify this as an impulsive wave, and most likely the wave 5 of this structure, because as you can see, the wave 4 did not get into the territory of wave 1. Wave 2 did not go below the range of wave 1, and wave 3 is not also the shortest. And in some cases, yes, wave 5 can be longer than wave 3, but wave 3 cannot be the shortest among the three of them. That is wave 1, 3, and 5. So wave 3 is not the shortest here, so this can still be considered an impulsive wave. Okay, so expecting a wave A, B, and C is very, very possible. I'm telling you, it's very, very possible based on what we are seeing here and based on where we are coming from. That is the 3 months time frame. It's very possible that this is very, very correct. Okay, then back to what we were saying. Elliott wave and harmonic patterns have their similarities in identification because they both use the concept of market circle. being emotions and all of those stuff, sentiments and all of that. So you're being sentimental on both of them, unlike what you're doing on smart money concept, identifying just pure patterns. But it is more useful to mix them with smart money concepts than just doing pure harmonic patterns or pure Elliott wave, or mixing Elliott wave with harmonic patterns. Elliott wave is going to do you more useful when you use it. It's going to be more useful to you when you use it on smart money concepts. And harmonic patterns is going to be more useful to you when you use it on smart money concepts than when you use it on Elliott wave, because they are both basically having similar ideologies. You know, it's not like there's every tendency that if Elliott wave is showing you a bullish projection, harmonic patterns would also be showing you a bullish projection. You see, because they're also using similar futures like the Fibonacci ratio, retracement, and all of that. But smart money concepts can be showing you a bearish pattern, and Elliott wave is showing you a bullish possibility. Okay, then now the confluence and the doubt becomes stronger. But when you're saying you're using harmonic patterns and smart money concepts, and then smart money concept is showing a different thing for harmonic patterns, it's then easier for you to make a different decision, or take that as a low probability trade. So what I would say is that no knowledge is a waste. As you can see, it's all about confluence. And this is just me understanding the next direction, which Elliott wave is useful in as much as smart money concept is useful. Like I said before we start the mentorship of harmonic patterns, you don't have to change your ways. You just have to learn new things. Learning new things will just make the old ones more flexible. And if you have a bad habit, it will switch it out. If you know Elliott wave and you're used to smart money concept and you don't like doing top-down analysis, Elliott wave will force you to start doing top-down analysis if you learn Elliott wave. And then from that, you can start leaving that bad habit of not going to make top-down analysis using smart money concept. So no knowledge is a waste. Don't learn to change your ways. Instead, just learn to improve. And you will keep seeing your improvement. That's how this stuff works. Okay? So any more questions? Okay, so I'm going to assume that will be all. But I'll have to end the class now. At least we did something very, very useful. Okay, so we'll have to stop here.
Yes. Very, very useful, actually. Thanks, boss.
Good night, everyone.
Good night, boss.